Good morning. I'm with Dolly Varden, CEO of Shawn Khunkhun, and Rick Van Nieuwenhuyse of Contango ORE. Symbol is CTGO and DV for Dolly Varden. Good morning, gentlemen. How are you?
Good, Robert. Good to see you.
Good morning, Robert. Thanks for having us on.
My pleasure. So I've already watched a couple of your conversations. I think, Rick called it a song and dance before. So let's just do it more informally. Let's just have a conversation, guys. So obviously the conversation is the merger between your two companies. And I think my first question for both of you, the one that when I read the news release, I said, why now?
Shawn, you want to go first? I mean, the audience knows you, so.
Yeah, I could do the why now. If not now, when is what comes to mind for me. We're in a moment of time right now where commodity prices have broken out, particularly gold and silver, record nominal highs. We've been on a huge run, and however, not everyone is participating in this market equally. There's a lot of assets that don't have access to capital. So I think it's important, companies that are being acquisitive, companies that are being surgically aggressive are being rewarded. So, both Rick and I have been on a growth trajectory, whether it's moving our projects or going out and bringing in other assets. Rick brought in the Lucky Shot and the Johnson Tract asset. So, and then at Dolly Varden, we've brought in a total now of 5 past producing silver mines. So it's really, we've been on this path for the last 5 years. Obviously this transaction is a step change. This is, a very, very significant transaction for both companies. We're creating a $1 billion merge co entity that's going to have, big cash flow, and a pipeline. So it is, and we want to continue on that path. We want to continue growing. But, for me, it's, if not now, when? And, but we have been in the spirit of building these, and that's from my perspective. I don't know, Rick, if you've got more to add or a different take.
Yeah, I mean, from Contango's perspective, the why now is really kind of a natural growth pattern. We put a couple of assets that fit the direct shipping ore model. They have a timeline, and for to get into production, Lucky Shot being the closest to production, 2 years away and about $50 million of investment. Very easily, it's a small mine, but it's going to generate a fair bit of cash flow because it's very good grade. It can very easily go up to Fort Knox for processing, or it can go elsewhere. We've got a couple of other options that we're looking at. The Johnson Tract one is the one that I really see the great synergies, because they're both precious metal rich sulfide ores, and so is Shawn's asset at Kitsault Valley, and that's where to me where the real synergies come in and where the scale comes in. There are a couple of mills around that are available. They're on hold or on care and maintenance right now, and together these assets can more than fill those mills. So we see a real opportunity now to move these assets forward in, let's say, in the next 3, 4, 5 years, the group of assets. And certainly from our perspective, we love the addition of silver to the portfolio. We didn't have a significant amount of silver in the portfolio, so this, from our perspective, gives us that. And silver is very exciting right now, and I think silver's got a really bright future. And then the scale of a $1 billion company has access to a different level of capital. So we're very excited about the merger of equals, and I think all those reasons kind of go into the why now.
And Robert, I just want to add from my perspective, we've been out there, and you and I have been meeting a few times a year in person, getting together probably quarterly, virtually, and my message has been consistent. We wanted to create an entity that had cash flow, a pipeline, but continued exploration growth. And this transaction enables us to get there, right? So Contango's getting exposure to silver. Dolly Varden shareholders are getting exposure to production, cash flow, and a pipeline.
Very good. So what makes it so compelling for a new investor? Like, in your mind, what's the pitch if somebody doesn't own either stock right now? Why is the combination of the two something that they should really take a look at more closely?
I'd like to start here. For me, if you're a precious metals investor, and you're looking for a up and coming mid-tier precious metals producer focused in North America. So if grade is important to you, if jurisdiction is important to you, this is the new entity, this is the new player in the space. And the only company that resembles it is Hecla, which is valued at $10 billion. So this is the next one. So for me, it's a really simple concept. If you're a precious metals oriented investor, grade and location.
Yeah, I don't think I can add much to that, because that's always been my favorite slide in the deck, is when you put our gold assets together with Dolly Varden's silver assets, and using that DSO model, because they fit the model. They both have grade. They're both they have assets that are close to infrastructure, so you don't need to go permit and build a bunch of new infrastructure. And then when you look at the scale of what we can produce, we'll start out with $100 million of cash when we put the two companies together, US. We'll start out with $100 million of cash flow from our Manh Choh operation. So now you can fund the growth profile. With our assets, we can go to 100,000 ounces with Lucky Shot annual production. That means our cash flow increases by about $60, $70 million. And I'm using a $3,500 gold price as my base. And then you add Johnson Tract and Kitsault, which are again synergistic, because they're going to go through the same kind of mill. And so now you're up at 200,000 ounces of annual production, plus the silver component, which is probably going to start out at 3, 4, 5, 6 million ounces of gold. When you look at the string of pearls in the upper Kitsault Valley, you don't need to get them all going at once, and that's kind of the beauty of the DSO model. You don't need to sort of get to that 2 million ounce gold deposit or 100 million ounce silver deposit to get the thing going. You can start out with 40 million ounces of silver. That's plenty of silver to develop a 4, 5, 6 million ounce a year mine, and they're underground. All of these assets are underground, so they're again, that's a skill set that we have, and we can continue to build on.
So you've said that a few times now, Rick, where you actually want to ship the ore straight to a mill, or I think I heard you say Taiwan once in a conversation. So can you explain that a little bit to us? What's the intention here in terms of getting some of these assets that are at the more of the feasibility stage to actually be mines?
Yeah, so let me just maybe spend a minute explaining the DSO model, the direct shipping ore model. So when we developed Manh Choh, so we found Manh Choh, high grade, 8 gram per ton, open pit gold deposit. So at the time, we said, okay, we can go develop this mine ourselves. We can go raise $500 million of capital to build a mine and take probably 5 years to permit the mine. And when we were faced with that decision, this was 2020, so beginning of COVID, and we said, that's a tough road. And particularly at that time, markets were anything less than stable. And so we looked at an alternative option, which was Fort Knox had excess capacity at their mill, and the ore was good enough grade that you literally load it, direct ship ore, load it in a truck, run of mine. So you basically mine it, you put it in a stockpile, you throw it in the truck, haul it up the highway. It's 240 miles, so it's a long drive, and then process it on a campaign basis through the mill. We did that. We entered into that agreement with Kinross. They were the operator manager. We then got the mine in production within 3 years, and July of 2024 we started pouring gold. So and we've been consistently pouring gold every quarter, roughly 15,000 ounces. It fluctuates a bit. We're going to finish the year and generate over $100 million of free cash flow this year, and we've got 3-4 years more to go in terms of the mine life. So it's applying that same model to Lucky Shot, which is on the rail system. We're 20 miles from the rail at Lucky Shot. The resource grade's about 14.5 grams there. We'll probably be more like in the 10 to 12 grams from a mining grade when you add mine dilution. It can get on the rail. It can go up north to Fort Knox, or it can go down south to Seward, and then you put on a ship or a barge over to Taiwan. Those are all viable options. We'll work to see which one makes us the most money. We have a good working relationship with Kinross, so that's sort of a natural. Then when you get to Johnson Tract and Kitsault, I mentioned they're both sulfide ores. They're precious metal rich sulfide. Johnson Tract's heavy on the gold, and the Kitsault assets are heavier on the silver, but mineralogically and metallurgically they're consistent, and they're both on the water. So we find a mill that's on the water, which we know there's a couple of them around, and work out an arrangement, and that arrangement could be a tolling arrangement, or that arrangement could we just buy the mill. And to me, and now you've combined sort of our direct shipping ore model with a hub and spoke model. And so you can keep that going for years. It just needs a couple of criteria. You got to be high grade, and you got to be close to existing infrastructure.
Yeah, and that's something that really stands out. I mean, if you look at slide 8 of the transaction presentation, the grade of the assets of the combined entity really stand out. I'm not sure there's many peers in the sub 1 billion market cap area that have such high grade across assets as this company now does. Okay, thank you for explaining that. I got a better idea of the vision now. Let's talk about priorities for 2026. A lot of investors are probably start asking you, if they haven't already, what's the plan for 2026? What's the news flow going to be like in 2026? So what do you say to that?
Shawn,
I can jump on that. So, you've got the 60,000 ounces of production that happened in 2025 at Manh Choh. So you've got ongoing production, ongoing cash flow at the operating mine. At Lucky Shot right now, there is an 18,000 meter drill program. So that'll be generating results. So you've got production, you've got the catalyst to drill results, you've got some what I would describe as upgrades to infrastructure at Johnson Tract that's occurring in the summer. And then at the Kitsault Valley, in addition to the 80 drill holes that are pending, so you've got pending assays from the 56,000 meter 2025 drill program. We've got a big drill program that we're going to be launching into in the spring. So another 50,000 meter drill program. So, for me, Robert, as the CEO of Dolly Varden, I had a company that was only generating news a few months out of the year, right? It was, big, high impact, results, and we're significantly growing the resource, but there'd come to a period where there'd be a void in news flow. Having this entity that has multiple projects where you're going to have a combined 70,000 meters of drilling across the portfolio, it's going to be a news-rich environment. And the great news is, you mentioned slide 8. It is slide 9 in the presentation that walks you through the systematic plan of ongoing production, drilling at Lucky Shot, the camp upgrades, the initial construction and surface infrastructure permits and whatnot that are occurring at Johnson Tract that are all important, but not always the most rewarding time for shareholders. And then you've got the high impact growth at the Kitsault Valley. You've got a new MRE coming at Kitsault Valley. And, you referenced the great grades in the portfolio. Well, the other thing to take note of is the silver gold composition, which we think is going to dramatically increase. For any Dolly Varden shareholder that's concerned that the silver entity has taken on a lot of gold exposure, we're coming right back with adding a lot of silver to the mineral inventory, and that is through the inclusion of the Wolf vein, which has been the biggest growth engine on the property. So we're expecting a new MRE in the first half of next year, and again, it's so a lot of drilling, and again, having the production, the free cash flow is the key.
Okay, very good. And is this transaction more about scaling up? 400 million market cap, 400 million market cap. You put it together, you might get $1 billion market cap. Or is this about the synergy of the assets and the corporate teams involved?
Yeah, I'd say it's all of the above, or both of those. Certainly, scale is important in the mining business in terms of access to capital. And a sort of a different level of shareholder, if you will, specifically institutional. So I think that is a reality and an important part of this. There'll be a significant amount of just ETF buying. We're on the GDX. We're part of the Russell 2000. I think the triple witching is this Friday, so there'll be some buying resulting from that. And Dolly's on the silver, two of the silver ETF. So that's all part of that. I think our bankers estimate that they'll once the transaction closes, there'll be in the neighborhood of $50 million worth of ETF buying. But the other part is really the synergies, and I would say that synergies really drove this. And I think the synergies between Johnson Tract and Kitsault Valley ores specifically are my main motivation for wanting to get this done, because you've got. I used to say we had a great 5-year plan, and now I say we've got a great 20-year business opportunity in front of us. And as we started the conversation talking about where do we fit in the hierarchy of for investors, gold and silver investments. There really is only one other main company, and that's Hecla. And that's a $10 billion market cap company. We're starting with I would argue a better portfolio of assets that can get to that same level of growth, but we're starting at $1 billion market cap, sub billion market cap. So I think that's a pretty compelling investment thesis for shareholders, for investors.
And Robert, I just want to add, we're giving investors exposure to 4 mining districts. I love consolidation in the mining space. We've been rewarded and become a dominant player in the Golden Triangle because we took the lead and we consolidated, first with the Homestake and then the Big Bulk and adding, 100,000 hectare contiguous land package in the southern end of the Golden Triangle. It was a rewarding exercise. What we're doing here now is we're bringing geographically consistent projects under one banner. And again, we're reducing the overhead of 2 management teams, 2 companies. So you have the efficiencies. And again, I've been around the investing space for 22 years. Investors want to be in those must-own names, right? Where you've got serially successful mining entrepreneurs, you've got great assets. We haven't talked about the shareholders. The shareholders here it's a who's who of corporates like Hecla, institutions like Franklin, very, very successful investors like Eric Sprott. They're all coming together. We've got about a third support before the transaction was even announced. So we went out and, the weekend before the transaction was announced, we socialized this to our large shareholders. We got their support. We got them to sign voter support agreements, and they get it, and they like it, and they celebrate it. And having an entity that's going to trade initially $10 million of stock a day, it's liquid, and I do think this is a case where 1 + 1 equals a lot more than 2.
Yeah, so a follow-up there on the shareholder question. So yeah, slide 10, you go through some of the major shareholders, and yeah, it really is a who's list in the junior mining sector when you put these two entities together. What is the feedback you got from Hecla or Sprott or any other feedback that you can share with us?
Some of the general feedback I got was, for Dolly, anytime you can go from exploration to operations, it's extremely positive. And our shareholders, we've made good decisions. We've been good stewards of capital. We've hired great scientists, and we've made good decisions at the right time. So there's a trust that we've built over the last 5 years, and so they continue to back us, and they like an engine that now has the ability, with the cash flow and the pipeline and Rick's team, where it's a really good platform to continue to build off of.
I'd say on our side, our shareholders have been very, very supportive. Like the idea of from Contango's side, gaining the silver exposure, and see the obvious synergies between Johnson Tract and Kitsault.
Okay, and now just housekeeping questions. I'm curious, where's the corporate headquarters going to be now? And tell us about the management team of the combined entity, maybe some faces that shareholders of Dolly may not know.
So I'll jump in here. So going forward, the company will remain. So CTGO will be the surviving company, if you will. It is a merger of equals, but shareholders will get Dolly shareholders have a 50% interest. It'll be listed in New York. Our headquarters for Contango's where I live here in Fairbanks, and then we'll maintain our office in Vancouver. So we'll have Vancouver presence as well. I'll be CEO. Shawn will be a very active president. We have our chairman will be Clint Nauman, who I've known for a long time, like literally about 40 years. Clint started his career with Rio Tinto. We met, or we got together when we spun out Alexco from NovaGold back in about 2006, I think it was. And we developed the Keno Hill mine. That was eventually sold to Hecla, kind of a small circle here of overlap. One of the many between Shawn's Dolly Varden and Contango. So that'll sort of Mike Clark will be our CFO. That's sort of the executive team. I think we'll have a total of 15 shareholders, Shawn, I think somewhere like that. So we'll be a smaller, still a small entity, and we'll have 31 million shares outstanding. And we've kept a really tight share structure at Contango. We like that. We think when there's aggressive buying, it really makes a difference. When you have don't have 300 or 400 million shares outstanding. So that's the team. Obviously, Shawn's team's coming over. My team's everybody's. We don't have a big. We don't have a lot of extra people that aren't busy. So we don't see anybody leaving here.
And then as far as the assets, the projects of the merged entity, you kind of show them like they're all sort of on the same level, but in terms of capital and what you're going to allocate to each asset, how would you rank them over the next couple of years?
I think it's more about timing, and so just outline kind of going through the pipeline. So Manh Choh's in production; it's generating the $100 million roughly of cash a year. Lucky Shot's next up. We're doing the 18,000 meter drill program now. We'll continue that through the winter, and then in the summertime, we'll have some surface drilling. We'll do some more underground access and development, and then we can get back to drilling. So that drilling program will take roughly a year, maybe a little bit more to get all the drilling done. The objective is to outline 400,000 or 500,000 ounces of resource, and then subset that into a 5-year mine life producing 50,000 ounces of gold. We'll probably ramp up at 30 and then build it up to 50. And that'll take about $50 million over a 2-year period. So a year to do the drilling and a year to get a feasibility study done and put in your underground development to, for basically stope access. It's not a big mine, but it's going to generate, it's very good grade. So it's going to generate, good solid cash flow. Meanwhile, then at Johnson Tract, next year, we've got about a $20 million program. It's to build a road to connect our camp to the proposed portal site. We've been permitting the portal site with the state of Alaska. This is on private land. We expect to have that permit in hand in Q1, and then we can mobilize equipment in the summertime to start the tunnel and upgrade camp so we can have wintertime operations. I'm not sure we'll get all that done next year. Our objective is to try and get all that done, but at least we'll get the road and get the equipment mobilized in. And then following that, we build the tunnel. That's about a $25 million exercise, and then getting the underground drilling done to a feasibility level. That's another $25 million. We do expect to expand the resource because we're in a place where the mountain went straight up and the ore body went straight down. So we just had a hard time getting all the holes where we really wanted them. So once we're underground, we can do all that infill drilling and extend the ore body. I'm expecting we'll increase it at least 50% once we're underground. And these are very good grade. The average grade of this thing is just shy of 10 grams per ton gold equivalent. It's polymetallic, copper, lead, zinc, gold, silver, with a strong bias towards gold. And then meanwhile at Kitsault, we talked about a 50,000 meter drill program next year. That's fully funded. I like to say, one of the other things I like about the merger between our companies is, Shawn doesn't have a broke ass company. It's well financed. He's bringing in money too. So the $30 million would be roughly a $30 million program at Dolly next year. And again, so lots of news flow, lots of catalysts. And I think another thing we'll probably look at doing at Dolly next year is there's a road between the coast where the camp is and the Torbrit mine, which was it's a brownfields project. It was Canada's third largest primary silver mine. So you can with some road upgrades you can drive there, and so that's where I kind of see us, starting. That'll be the first. I think that'll end up being the first one we get into development. I think we're about 40 million ounces of silver there. So that's how we see rolling this thing out. I don't, it's not like we're having to rob Peter to pay Paul here, and we can't do this. We can do that, but we can't do this. I don't see that at all.
That road upgrade at Torbrit sounds like it's very important to me. What's the capital cost of that expected to be?
I haven't looked at it yet, to be honest with you, but it's we're not talking about a haul road yet. We're just talking about a road to get from point A to point B, to get closer to getting underground Torbrit. And what they did when was the last time they did work there, Shawn? It was it 2017 or so?
So yeah, the underground was rehabbed in 2017. So in addition to all the infrastructure you have in the area, you've got hydroelectric power coming in just south of the site. You're on tidewater. You currently have about a 19-kilometer road from Alice Arm up to our staging. And then there's a final 7 kilometers that would need to be upgraded. So we're not looking to do a 30-kilometer road. We're essentially looking to upgrade a couple of bridges and widen out in about a 7-kilometer spacing. So, and the nice thing is we have a special use permit in hand. So we have the ability to make road improvements and to maintain the road. So that permit, that important permit, is already in place.
Very good. And final question, just because I'm curious, it says that this will close most likely by early March. The transaction will close and Dolly will cease trading, and it will just be CTGO as the symbol for the combined company. Generally, when that happens, companies have big news to come right after the transaction closes. What can shareholders maybe expect from the company in March?
I mentioned, we've got ongoing drill results from the 2025 program. We've got the Lucky Shot drilling. I think that one of the big developments is going to be the MRE, where we've been guiding that we could see as much as a 50% increase to the number of silver ounces, and also some pretty significant improvements to the gold resource up at Homestake on a conversion and grade improvement metric. So it's going to be, again, we're a company that doesn't need to go out to market to dilute. We're a company that is anticipating about $50 million of buying post-merger. So again, any positive developments are not only going to be met with the public buying, but also the indices and the ETFs. So I think we've got a very, very strong spring. I think there's a big re-rating opportunity. And then again, continued ongoing drill programs. And that's where, if we can get to a place where the market recognizes and rewards us, Dolly right now is essentially traded as an unfunded developer, which is a much different multiple to a company that's got production. And again, silver's being really rewarded in this environment. Contango doesn't have that in their portfolio. So I think it is a really nice marriage. And then of course the size, the scale. So it's going to be a very, very, very strong spring. So again, we've got a shareholder vote coming up in and around February, whether that's mid-February, end of February. We're just getting our circulars out ahead of the special general meeting. We've got a lot of support going into the transaction. About a third of shareholders on either sides have either signed formal voter support agreements or indicated they're going to be voting for that. So we're feeling very, very good. The market response has also been very positive in the open market last week. And then we should suspect that in March, it'll be completed, court approved, and then the one entity. And then the other thing that we'll be looking to go out and doing is upgrading the Canadian listing. So Contango right now is only listed in the US. We're going to keep that Toronto listing. We're just going to move it from the venture to the big board, which once again exposes us to indexes and different institutional investors that are constricted to buy on the venture exchange.
Thank you, gentlemen. Cheers.
Robert, good to thanks for having us on the program.
Okay, take care.